Hi traders, and welcome to my video on the Adaptive RSI Indicator. This is a powerful indicator that can help you to capture moves like this one for over 300 pips, and this one for around 400 pips. Okay, so the Adaptive RSI Indicator is a custom indicator that you'd probably need to source and download on your trading platform if it is not already included. I'm using the MT4 trading platform. This is a pound-dollar 1 hour chart. This is the Adaptive RSI indicator here. Okay, and I've also attached the standard RSI relative strength index indicator to the chart below here, just so we can compare the two indicators together and see if it is worth using the adaptive RSI over the standard RSI, and to cover the different ways in which you can implement it to help filter your trades. Okay, so the basic principle behind the RSI, if we start with the basic RSI here, is that when price is above this level, which is the 70 level by default, the market is considered overbought, and we might look to sell on a reversal. Okay, and if price falls below this level here, which is 30, it's suggested that the market is oversold and there may be a turnaround to the upside, so we might be looking to buy. In addition to the overbought and oversold zones, you also have divergence. Divergence basically means when the RSI indicator is making lower highs, it suggests that the market might be dropping. And vice versa, when the RSI indicator is making higher lows, it suggests that the market is rising. Okay? And the adaptive RSI indicator basically does the same thing. Okay? In my opinion, it's not as good at divergence. However, it is perhaps more reactive when it comes to the overbought or oversold zones. And I don't mean more reactive as in it reacts quicker. I just mean it gives you better signals sometimes. And let me just illustrate what I'm saying. Look at this trend here. Okay, you can see this downtrend here. Okay, now if we look at the standard RSI, the standard RSI indicator said that the market was oversold here. Okay, so we may, or some may have avoided trading at that point and perhaps missed some of this move down. Okay, the standard RSI here said the market was oversold, and you can see the market still kept falling. Now, I think that there's no magic indicator, and they will all give you false signals, and perhaps you'll miss trades because well, you will miss trades whatever indicator you're using, which is why I always prefer to use price action, support and resistance levels. I mean, just if we look at that trend line that we've placed there, let me just draw it a bit better for you. When the market was here, we know from this resistance level and this trend line and then this level of support that this was a potential entry. You have this wedge pattern here, this support's held up well, and we have a nice breakout trade there. You don't need an indicator to tell you that. Just as we had this support level here and a nice breakout there. Again, wedge pattern. You do not need an indicator to tell you that. That being said, I understand some traders like to use them just because they look pretty on their charts, or they just want the extra filter. So going back to the RSI indicator, the original one here, that would have some traders may have avoided trading when they seen it was showing an oversold market. Okay, now if we go to the adaptive RSI on the other hand, it wasn't in an as extreme an oversold state. As you can see, it's still up here. Okay, at this point it's not as low as the standard RSI indicator. Okay, but on the contrary, it was high when we reached this level of resistance up here, as to be fair was the original RSI indicator. So really the adaptive RSI indicator tends to give a more favorable filter in terms of overbought and oversold markets. It can be used for divergence, you can see there. Okay, we have divergence to the downside. It's almost like a reflection of price. I mean, if you look at where the price is here, a long drop, reversal drop, and then you look at the adaptive RSI, it's the same, a long drop, a long reversal here. Okay, with the advantage being that is in an overbought and oversold location. So as this trend started to consolidate around here, this big range, a little bit left there, and then we've reached this level of support. If you look at the RSI, adaptive RSI, it's now really as low as it has been throughout this trend, which suggests that this trend is exhausted. And I mean, you can see from looking at the chart, you probably wouldn't want to sell here because you'd be selling at the low. So this is where an example of the adaptive RSI being a good way to filter trades if you are possibly thinking about selling at the end of a downtrend or buying at the top of an uptrend. Okay. Again, the divergence is not as quick as on the standard RSI. Here we can see the RSI is making higher lows and the market does turn around. Whereas if you were on the adaptive RSI, it's not really, its purpose is not really to spot divergence. Okay. If we go back to this uptrend here. Okay, now let's compare the RSI indicators. Okay, as we've seen this trend forming, especially after a breakout of this level of resistance, there's a nice pullback here, as you can see. You have divergence to the upside on the standard RSI indicator. The market is moving up. Divergence to the upside there. Market keeps moving up. Okay, and then as we looked at earlier, the divergence here to the downside, the market started to fall. Right. Now, if we look at the overbought conditions of the standard RSI, remember we probably don't want to buy in an overbought situation. So it would have avoided this trade, which I actually think would have been a good breakout trade based on this resistance level. However, you could have waited for the pullback here, just to wait for the trend to play out and then just enter on the pullback. And that could have been a potential entry point there. RSI is not overbought. As it's overbought here, it stops you buying at this high point here, which after you can see the price did fall. So the RSI, standard RSI indicator did actually do a decent job of preventing you from buying too high in this trend. If you look here, when it's also in the overbought zone, the price is right at the top, so we would have avoided trading. You could have just looked at the chart and seen that you'd be buying at the top, but the RSI could have been a good way to filter that out, just as the adaptive RSI done something very similar there. You can see it's at its high point. And on the way up, probably wouldn't have been as good at picking the high points, although in real time the indicator may have been higher. But what it could have been good for here is the adaptive RSI. I would look for, on a trend like this, I would look for, okay, pullbacks. You can see them looking at your chart, but if you prefer the visual, if you prefer them to be shown to you visually, you can always just use the RSI indicator to mark support and resistance, and the adaptive RSI can do a decent job of that. As you can see, we had this pullback here, the pullback shown there, and then as price broke out above, would have been a decent entry point around here on this uptrend. Same with this scenario here after the pullback, we could have entered. There's still some gas left in the tank. To be honest, there are candlestick patterns down here, which would have signaled an entry. We also have just bounced off the trend line, not far from here. Okay, as always, make sure you've got good money management in place. I like to cut my losing trades short and just allow winning trades to run. For example, this move on this breakout was, there was almost 400 pips of profit potential on the way down. You could have used a trailing stop to be locking in your profits and moving the trailing stop. Let's just say your initial stop loss was here above this high and we entered on this breakout. When price fell to here, you could have moved your stop to this area. Price dropped down here, you could have moved your stop loss up here, and so on and so forth. Just locking in the trade as price continues to move, banking some pips and making the most of every move rather than just getting excited at this breakout bar and exiting for 30 odd pips. It's still a decent trade, but then if you want more of this trend, you're going to have to try and time a re-entry, which the more times you try to re-enter on a trend, the more times, the more chance you risk of getting it wrong, the more you're going to have to pay in terms of brokers, fees, spreads, commission, and you might get slipped out of a trade here and there. That being said, you don't have to enter on the initial breakout. You can wait for the pullback here. You see how the RSI, adaptive RSI drops there, but then sort of consolidates around here, as I was saying earlier with the support and resistance. You can just wait for it to pull back up there and then look for the breakout, which is more or less what you can see looking at your chart. So really, all in all, I say with the adaptive RSI, the most beneficial thing it would be I'd use it for would just to filter not buying when price is too high and not selling when price is too low. I wouldn't sell every time it gets to a certain high point and buy every time it gets to a certain low point. I personally think there's more to trading than that, because it depends on where support and resistance levels are, trend lines, and candlestick patterns can be useful for timing entry and exit as well. Probably wouldn't go out of my way if it's not already included in your trading platform, just because the standard RSI does a fantastic job of identifying market trends and momentum with the divergence and the overbought and oversold zones. Okay, well, hopefully you found something useful in this video. Please like and subscribe for more. Thanks for watching, and I'll catch you on the next one.